In this video, we're going to cover 7 trading quotes from Bruce Kovner. Stay tuned. Hey traders, a very warm welcome to you. So I like to cover trading quotes from very successful traders and hedge fund managers on this channel. There are loads of other ones I've done. This one is one of those videos. 7 quotes from the hedge fund manager trader Bruce Kovner. There's a lot, and before we get through to these guys, there's a lot of synergy and similarities between all the great traders out there. Let's see if you can spot them as we run through them. Okay, number 1 is have a stop. Well, that's the first one. There we go. Have a stop. Know where you will get out. We say this often, and of course, we feel like we're repeating ourselves a bit. You say it to yourself, and you're writing in your trading plan. But having a stop and knowing before you get into the trade where my exit point is, you don't want to be taking a trade unless you know where your exit point is. And he goes even further with that, and he says, then I'll adjust my position size to suit. This is standard 101 of trading. You've got your position, you look at your position, where is my exit? Where do I want to come out when the trade is negated? Where the thesis of the trade is negated, where am I going to come out? Oh, it's here, right. How much am I prepared to risk financially? X, right. I need to have that distance from there and work out my position size. That's how he does it. That's how we should be doing it as traders. Right, number 2, it's okay to make mistakes. In other words, we beat ourselves up so often when we make mistakes, unnecessarily so. Mistakes are going to happen, and the best traders have got such a poor hit rate, much poorer than we think. And so as long as the mistakes aren't damaging us, it's okay to make the mistakes and learn from it, learn from it, learn from it. Even if there's nothing to learn from it, even if the trade just didn't work because it didn't work. You know, you put the trade on, you followed your rules, you made the trade, it didn't kill you, you do the next one, you do the next one, you do the next one. It's okay to make mistakes. The trouble is with many traders is they put a lot of financial pressure on each individual trade, and then it's not okay to make mistakes because that's doing 10% damage to their account, 10%, and they're getting hammered both psychologically and from a capital perspective. So it's okay to make mistakes, but put yourself in a position where it is okay to make mistakes, if that makes sense. Number 3, undertrade, undertrade, undertrade. He goes on and says, listen, most traders are trading too much. You should be trading half your position size. Most of us should be, were his comments, and should be trading far, far less. There's less opportunities, real opportunities out there than we believe. We are, and I'd say myself, I'll probably put my hands up to this one as well, guilty of taking too many trades. Too many trades come over our desk and we say, yeah, I'll have some of that, I'll have some of that, I'll have some of that. And before you know it, you've got too many trades. On reality, you probably only want to take 30% of the ones that look great, because those are the really good ones, and those are the ones that are really going to give you, the profits that you're looking for, as opposed to, a loss here or a small win here, diverting your attention, diverting your resources, when in reality you could really nail it down and go into far fewer trades and get better results. Number 4, first rule of trading, don't lose money for reasons you don't understand. So what does that mean? That basically means, listen, if you're going to take a trade and you take a stop loss, fine, we all get it. You went wrong, you were long and wrong, you got stopped. You were short, you got stopped out the high. So what? You get it, you understand it. What it means by this is don't start trading in stuff or instruments that you could lose money, don't understand. Like we had scenarios in crypto, people not quite understanding what they were purchasing and getting caught in a move down. We've had scenarios in people with volatility. They were getting involved in volatility trades, didn't really understand, the nature of the risk was that. We had the Swiss debacle with that kind of stuff. We've had all kind of different things where people have been not understood, why they've lost money. So it's unlikely for you watching this. I guess if you're watching this, you'll probably been trading or you've been investing for a while, and you kind of get it, and you're only hopefully investing in things you're familiar with or trading with things you're familiar with. But sometimes something comes across and we go, oh, I might get involved in that. I might get involved in options, or I might get involved in this. It's just really saying, hey, if you're going to lose money, that's fine. But the worst thing to do as a trader is to losing money for reasons that you don't understand. So understanding where the hidden risk, I guess is a good way of putting it, the hidden risk is in the trade that you're taking. Right, number 5, if you don't work hard, you won't become a good trader. Pretty self-explanatory. If you want to make it as a good trader, you've got to put the hours in. That doesn't mean the hours in front of the screen. It means the hours in looking at yourself, looking at your trading plan, all that kind of stuff. And it's pretty obvious, really. It's one of these games that if you do put the effort in, can be very rewarding. And to get to that level without the effort is pretty much unheard of. I don't know anyone who's done it. I'm sure there are a few people out there, as there are always going to be on the normal distribution curve, someone who's just come in and done very well out of it, but it's very, very rare. People who put the effort in are the ones who see the results. Okay, number 6 we have is novice traders trade too big. Definitely hold my hands up to this one. In my early days, back in the early 2000s, and I see this with other traders as well, trading way, way, way too big for the capital they've got. You know, they should be trading far, far less, concentrating on making the money as opposed to making the trades and then making the money later on down the line when the trades are going well. So novice traders trading too big. If you're trading too big, just cut it down. Just forget about trying to make some money for the time being when you're a beginner and you're a novice. Just get the flow of trades. Learn on a small amount of money. That's a really good piece of advice, that number 6. Okay, number 7. In a bear market, use sharp counter-trend rallies to sell. I've traded through bear markets, and that is exactly the right thing to do. In hindsight, now is one of my kind of earlier baptisms of fire. But, you know, this is how bear markets operate. They will have hammering down days, then will have absolutely rocketing up days out of nowhere, really vicious counter-trend rallies that just get sold into again. Does that repeat itself? Who knows? He's just going by experience and saying, hey, those sharp counter-trend rallies in a bear market need to be sold. They don't need to be bought by any means. Stand back if it's too volatile, of course, because bear markets can be very volatile. But he's basically saying, listen, you know, don't start buying on rallies thinking that's the bottom. If you're still in a bear market, you know, you need to be using that as an opportunity to sell. So a good mixture of stuff there. Let me know your thoughts on the 7 trading quotes from Bruce Kovner, and I'll see you in the next one. Take care. Bye-bye.